Hey, so thank you so much. I wanted to focus on the manic nature of our industry and really put it in a multi-decade perspective. A lot of people look at things in a really, really short term. When we launched our first funds, the entire market cap was $1 billion. And it seemed to me that it was the most compelling asymmetric risk reward trade I'd ever seen. It's up 3 orders of magnitude, and I still feel exactly the same way. I wouldn't want to invest in any other asset class at the moment. And I think we still have a couple decades of this to go. And so I talk to investors all the time, and I still hear people say, well, I guess I missed it. No, we're still in the beginning. The majority of institutions literally have zero exposure to this space. So it's really starting. It's a global phenomenon.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. That was Dan Moorhead, the CEO of Pantera Capital. In today's session, it is going to be all about reminding you all just how early we still are, that institutional FOMO has not fully kicked in yet, and mainstream adoption is only just starting to take shape. Everyone needs to understand that we are entering into a pivotal era where the window to front-run institutions is beginning to close, and we are front-running institutions, which I'm going to show you guys in today's video breakdown. High-end representatives from these large organizations embedded into the digital asset ecosystem, some of the largest in the world, are telling you guys that we as retail traders are not only smarter than institutions right now, but we are front-running them for a fact. That gap is closing. Why? Because these institutions are starting to transition and understand that if they do not adopt these new technologies into their core infrastructure, they are going to lack competitiveness to other organizations that do. So for now, retail still has the edge, but that advantage will not last forever. There's going to be 2 types of people in the future in crypto: the people that front ran the institutions and the people that got in after the institutions. It is my personal opinion, not financial advice, that you don't want to be the type of person that comes in after the final institutional FOMO push. So with that being said, let's dive into today's video breakdown. This was a response that I've written out to a wonderful post that Paul Gray from Metallicus XPR Network had put out on stablecoins, titled "Stablecoins, the Next Strategic Move for Banks and Credit Unions." Reason being is because he had this little tiny nice clip here, this little tiny quote, and it says, "The choice ahead is clear. Either watch deposits move into someone else's ecosystem or build your own." I cannot agree enough. Where I said here, institutional FOMO will happen. We're entering into an era where instant settlement, tokenized assets, and digital wallets are becoming the new financial backbone. The reality is simple. Deposits are flowing out of traditional banking systems and into private stablecoins and fintech rails at scale, and this trend is accelerating. Most stablecoins today are not issued by banks. They are issued by private companies. That means billions in customer deposits are quietly leaving the balance sheets of traditional institutions every single year. Their solution is not to fight it. They don't have time. Private organizations already front ran the banks with these new technologies due to the bank's inability to operate with these technologies, again, due to lack of regulation in the early days. Their only solution is to own it and integrate it into their core infrastructure. Banks and credit unions that fail to adapt will be left behind. Those that do adapt will position themselves as core infrastructure for the digital asset economy that is 110% being built out, which again, I'm going to show you guys in today's video breakdown. This is exactly what programs like the Metallicus stablecoin pilot are enabling, letting institutions design, issue, and test their own stablecoins in a compliant first sandbox with no customer funds required and seamlessly integrate with the metal, dollar, or XMD basket for instant liquidity and interoperability. Every bank will have to move on chain, not because it's trendy, but because the competition for survival of their deposit base depends on it. So you have to understand that, again, we're in a phase, an era where we as retail investors are front running the institutional FOMO.
You know, back then, to be fair to institutions, I guess, the maturity of the infrastructure typically wasn't there. Sure. And the education that was required, people just didn't get it, right? You need a couple of years, you need a couple of cycles for it to start to click. And I think, honestly, Ripple did a phenomenal job as being part of that education, because I feel like Ripple was the first blockchain to really go for the institutions and say, guys, this is 24/7 movement of value, get with the program. So you were very much ahead of your time, I shall say. But clearly institutions now are coming on board because I think in part the technology has proven to be sufficiently robust and quite frankly better in many regards than what a lot of institutions can offer. A lot of the existing TradFi banks look at stablecoins 24/7 value movement and say, whoops, my systems can't support that.
Yeah.
And it is not going to take that long for them to do the same thing when they look at on-chain stocks and ETFs and you name your asset, right? And so I think right now there's really a turning point in how they look at the technology, how robust it is with the ongoing regulatory clarity. The level of adoption and quite frankly, in some instances, FOMO that we're seeing from institutions is pretty significant.
There you heard it. The level of institutional FOMO that we're starting to see is pretty significant. Now, who is that gentleman? He is, just the CEO of Ondo Finance, whom just the other day on October 6th, 2025, Ondo Finance is pleased to announce the successful completion of its acquisition of Oasis Pro, including its SEC-registered digital asset broker-dealer alternative trading system and transfer agent or TA license. This acquisition provides the Ondo Finance Group with the most comprehensive set of SEC registrations to provide digital asset services in the United States. We now have the most comprehensive suite of licenses and infrastructure necessary to develop compliant and regulated tokenized securities markets in the US. This acquisition makes Ondo's offering one of the strongest commitments to building a transparent, accessible, and compliant financial system on chain, said Nathan Alman, the CEO and co-founder of Ondo Finance. So this is a big deal. And this, again, this gentleman here from Ondo Finance is telling you guys, look, institutional FOMO is taking shape. Mind you, if we come over here to a recent panel discussion, this is Sandy Cole, an industry-leading expert with credentials at the World Economic Forum, the CFTC, the DTCC, and actively working at Franklin Templeton. And listen to her tell you that we, as retail traders, are front-running the financial institutions.
And what can you do with them? I would argue that retail has beaten institutional to this space already. That retail already understands the crypto markets far better than any institutional players understand them at this point. And that the capabilities and the functionality that the institutional financial services markets are going to need to develop are all coming now from the retail side. The gamification, the social interaction, the inclusion of short form video as forms of instruction, the ability to take actions on one's own that equate to what institutional players can do today, the ability to transfer assets peer-to-peer. These are all activities that retail are used to, and they operate with day-to-day in their everyday life. It's our institutional industry and it's our institutional rails that have kept us from keeping up with that level of innovation.
That's 5 things that she just mentioned off the rip, right? Just off the dome that retail is doing to beat institutions. So nobody can tell me, again, because this is coming from somebody with valid credentials, that that's not to be the case. And so she's not the only person with valid credentials in this space that has that opinion. This is a video from Token 249 Singapore that took place just a few days ago. Literally, I think the summit was from the 7th to the 9th of October, if I'm not mistaken. This video was posted a day ago. And this gentleman here has one of the biggest Bitcoin treasury companies in all of Europe. And listen to what he says, because he echoes exactly what Sandy Cole just said. Take a second here and listen.
The chances. I think you also have to look at, so obviously everything that I say is very focused on Bitcoin because that's what we've built our treasury on. But if you look at Bitcoin as a movement itself, it's quite different in the institutional world, in the normal investing world, in the sense that, retail investors have got this first and the institutions are just starting to understand it. I've just got back from New York. I met with over 12 different fund managers over there, and their knowledge is tiny compared with, my shareholders. We've got the 3rd biggest community on X for a Bitcoin treasury company, probably a digital asset treasury company as well. and the knowledge that the retail market has got is fantastic. So I think that's part of the story as well, in the sense that the institutions are understanding it later, just like they did with Bitcoin and just like they did with other cryptos, I'm sure.
So again, I'm not just trying to show you guys one person with valid credentials, but multiple people with valid credentials say the same thing. We as retail investors have such a massive opportunity right now to front run the financial institutions, and that opportunity gap is dwindling. So again, don't take that from me. More people on stage at recent summit events. This is the crypto asset conference that took place in 2025. Listen to this gentleman here go on to talk about how we are starting to transition from a retail space into an institutional crypto industry.
Yeah, somehow, obviously, we agree on that. I think coming back to the main question, the regulatory framework is actually what forced literally everyone in the business to get educated, to develop themselves, and big institutions like
the business. Where do you mean?
Yeah, the crypto space, crypto business per se. Because if we are talking about major banks, you just mentioned Spain as an example. We have other major banks, even here in Germany, who acquired a license in crypto, and they have the need to have a counterparty which is licensed as well. So from that point of view, the license framework just opens up doors into the institutional world. So the crypto business has grown up from being more retail focused to now moving into institutional business, and the institutional money flows into the market.
But still, I guess we are still, maybe before we were in like kindergarten, now we're in preschool, so it's still early, right?
Kind of, yeah.
I mean, there's a long way to go to.
We were in preschool, now we're in kindergarten. That's at the very bottom, everybody, right? And they're just sitting there joking around, laughing like, no, this is really where we're at. And I don't think people understand. Again, they underestimate the environment in which we're about to head into. Over the next 5 years, we're going to see more growth than we have over the last 16. That is a mind-blowing aha, oh my gosh, I should probably start to pay attention moment, considering the recent turmoil that we've seen in everybody's mindsets and people saying, oh my gosh, crypto's a scam again, and this and that. No, guys and gals, come on now, wake up. Let's pay attention to detail. So I briefly talked about stablecoins in this, where we know that Metallicus has a sandbox with financial institutions and credit unions to allow them to come in and create their own stablecoin in a compliant and efficient manner for their clients, right? Well, they're not the only ones. It's not just going to be banks and financial institutions, albeit I'm going to show you that. We need to understand it's going to be all organizations. It's going to be the likes of Amazon, Walmart, some of the biggest names in the game, Google, Microsoft. All these organizations are going to have their own compliant digital assets. And so don't, again, take that from me. Let me show you guys the documentation. So we're going to come over here and I'm going to present you guys this Citigroup document that was just released. So this is Citigroup's Stablecoin 2030 Web3 to Wall Street September 2025 report. Shout out to the CYPRX researchers for this document. Always dropping gems, keeping the community alive and in the know with what the institutions are doing. If you guys ever want access to the research that we do in the CYPRX private community, you guys can always head over to CYPRXtrading.com and you can lock in and tap into all of the information that I'm sharing with you guys today. The panel discussions that nobody watches, that hardly have any views, of these ongoing panel discussions, hundreds of them per month, of these industry-leading experts talking on stage. It's weird that nobody pays attention. We got them all in the CYPRX private Discord. We got all the documents from all these large organizations as soon as they drop, from all global companies and organizations. It's not just the ones here in America. So this document was so freaking phenomenal to read. I said here, core infrastructure for issuing, storing, transferring, and settling digital money is steadily improving and reaching production-grade maturity. This includes exchange acceptance, custodial integration, clearing, and settlement. Now, that's not coming from me. That's coming directly from this document, from Citi. It says here, today we expect stronger stablecoin growth compared to 6 to 9 months ago. However, this does not mean that we are more bearish on other digital and on-chain money form factors. We do not believe in on-chain wars. We believe that many digital forms will flourish. Much of today's crypto infrastructure will fade into the background, just as hardware and software did with the internet. We are still in the dial-up phase, But as we move towards the broadband era of blockchain, the focus will shift. And in 5 years, we won't be talking about blockchains. We'll be talking about results and activities in this space, says Chief Strategy Officer and Head of Global Privacy Operations at Circle. A common misconception is that a single digital token or blockchain or form of money will dominate. Then if you come over here, this is where it talks about institutional adoption of stable coins is still in its very early stages, maybe a 0.5 on a scale of 0 to 10. What? Do you see how early that is? That's literally at the service level. But we are seeing serious institutional interest in this space across banks, asset managers, and other financial institutions pick up. And this is coming from the head of institutional client solutions at Visa. If you are watching this and you have a skeptical family member, go ask them if they have a Visa card or a MasterCard in their pocket. They most likely do. Tell them to take that out, look at that little tiny logo, and see that the head of institutional client solutions at Visa is telling them we are at the ground level of crypto adoption. Very early stages. Now's the time. Now's the time to start paying attention. Last but not least, remember I mentioned that banks are going to integrate this into their core infrastructure. Don't take that from me. Take that from one of the largest banks in the game, Citi. Core infrastructure for issuing, storing, transferring, settling digital money is steadily improving and reaching production grade maturity. It says it right there, right? Undeniable proof that this is happening. Here's another document, because we talk about DeFi and staking and yield generation, right? Well, again, I don't just wake up in the morning and like, oh, I'm going to tell everybody that institutions are going to stake and earn yield on their digital assets. So we as retail traders who are front running the banks probably should too. No, I'm here showing you guys physical documented proof. So I said in this post, institutions are making yield a core portfolio strategy, from Hex Trust adding STETH, which is a liquid stake version of ETH, custody into institutional grade Solana staking with Lugano nodes. Hopefully I'm pronouncing that correctly. Lugana nodes, something like that. So why are many retail traders fading the exact trend that smart money is embracing? The digital era rewards those who earn yield while they hold. Staking, liquid staking, and secure custody are not side plays anymore. They are the foundation of institutional growth and long-term wealth. Do not sleep on what the biggest players are quietly building. Get educated, because you guys just heard people with valid credentials on stage tell you guys that banks are still in the early stages of getting educated, right? So you should too. Aim to earn yield on your digital assets. Obviously, of course, assess your risk properly, but you should at least, in my personal opinion, try to stake to secure the network in which you like or operate on, right? And position yourself for this next cycle. So here, this is a direct post from Hex Trust where it says right at the top, institutions are increasingly viewing staking as a core portfolio strategy. Not a side portfolio strategy, not secondary, no, a core portfolio strategy. But to securely do this, they need partners who prioritize compliance, governance, and reliability. And so this is where Hex Trust and Luga nodes comes in. The institutional choice for Solana staking. Here it says, this week signals the 3 biggest moves shaping Ethereum staking for institutions. Regulated custodian Hex Trust now supports custody and staking for STETH, giving clients a one-stop option for secure storage, staking rewards, and liquidity. The impact for institutions is that this widens the access to STETH through qualified custodians, and we know that this needs to happen in order for these institutions to take shape. Now, if we come over here, we had an industry-leading expert from Standard Chartered. This is the global head of transaction banking at Standard Chartered, tell you guys that we are at a major tipping point for digital assets.
In my mind, the landscape of finance or digital finance is at a tipping point. So tokenization and digital assets are about to move from pilot into mainstream.
Now, that key vocabulary word right there, mainstream. Remember, it's not just banks whom I'm trying to show you guys are about to FOMO into the digital asset ecosystem. It's every organization on earth, every restaurant, every freaking company. It's everything, because if they don't, they will lack competitiveness in this new digital era. So remember, trying to show you guys industry leading experts in this space. This is the CEO of Exodus Wallet. And again, an organization that was one of the first to tokenize their stock on the New York Stock Exchange. Well, listen to him tell you guys that it's not just going to be the banks. It's going to be the likes of Walmart, Amazon, some of the biggest name organizations in the game that everybody knows and uses, but for some reason doesn't know about crypto and blockchain. So imagine how many people, if you live in America, go to Walmart every single day. And out of all those people that go to Walmart every single day. Imagine all of them right now that have no freaking idea that Walmart is integrating crypto with digital assets into its core infrastructure for its customers to use. Wouldn't you rather be the type of person that's in Walmart walking around looking at everybody else, knowing what type of system they're utilizing to pay for things inside of Walmart, and be an investor in that, right? While everybody's walking around like clueless, brainless zombies, having no idea that the entire infrastructure and foundation of finance is being completely transformed, wouldn't you rather be on the opposite of that? That's what I'm trying to say to you guys. There's going to be a divide. The people that got in before the institutions and the large organizations and the people that got in after. Check this out.
Even better experiences. And so let's go back to the Genius Act, right? And then making the regulatory clarity around stable coins known to everybody. And so this is going to open up so much innovation for banks now and companies like Amazon and Walmart to actually create their dollar stable coins. The reason this becomes so powerful then is that consumers around the world, consumers outside of the United States, a lot of them want dollars. They want to save in dollars because compared to their own currency, so like, for example, in Argentina or Venezuela, these currencies have massive inflation. So these consumers, they want dollars. So the way that we think about it for Exodus and where we fit into this, we think, well, what if we were to build a real seamless and simple experience? Let's just think of it kind of like what we might know of Venmo in America, that's kind of built more on traditional finance. What if we were to build that kind of experience and bring that to people in other countries? But what if we were to build it on stable coins so we can get into these countries, we can move quickly, we can deliver a lot of benefits so consumers can quickly earn interest or yield on the dollars that they're holding. They can easily buy their goods and services with just a tap of a phone, and they can even pay their friends. So that's kind of how we think about it. We think, again, kind of in summary, that what came before us with kind of the traditional financial system, the credit cards and the checking accounts, that we can extend that with stable coins, make it all very easy to use, package it up, and deliver it to a world in an easy consumer experience.
And so that exact perspective that he just mentioned, there's a race for that. There's a competitive landscape for exactly what he just mentioned. These organizations know that if they don't all do what he just said, they risk falling behind. So they're all about to do it, which full circles us back to the introductory of today's video breakdown, is to show you guys that we're early, we're front-running institutions. Now is not the time to lack on your education. Understand the opportunity that we have and the upper hand that we have right now to front-run financial institutions, and that they are coming. As always, bringing you guys some of the realest information in the game. Do me a favor, if you enjoyed, smash that thumbs up button and subscribe to the platform. We do appreciate the love and support. If anybody's interested in tapping in our private community, getting access to all of the research that we do here at CYPRX, you guys can always head over to CYPRXtrading.com. We'd love to have you on the team. With that being said, I'll see you guys in the next video breakdown.